Hey, everybody. Hi, this is me, Darius from Easy Markets, and today is Friday the 13th. So, if you're a little bit on the superstitious side, don't approach the markets today. But if you're not, look, the market does present itself with a lot of opportunities. So, hopefully, we can find those. So, yes, we'll dig into the markets, we'll dig into the news that came out yesterday. Today is a little bit of a quiet day, but I think that it could be the aftermath of from yesterday. So, yes, yesterday we had the US PPIs, but most importantly, the ECB, which cut its rates, and there's a lot of action in there. So yes, stick around. Hopefully, you'll enjoy the session, and I'll see you in a bit. Okay, hello, and good morning, everybody. Hi, this is me, Darius from Easy Markets, and today is Friday the 13th, ladies and gentlemen. So yes, hope you're not superstitious too much. I mean, in general, traders are a little bit on the superstitious side, but hey, hopefully, you're not gonna be too much superstitious. So, look, all okay, all good. I hope you're all having a wonderful start of Friday. We're gonna have a look at the markets, the usual stuff. We'll just have a quick wrap up for the week to see what happened. Were we right or were we not right? So yeah, look, before we jump into any charts or anything else, quickly have a read through. We need to have a quick read through of our risk disclaimers. So yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I will give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to mute myself for a little bit, and then we can continue. Okay, all right. Also, just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, now then, ladies and gentlemen, let's jump into the charts. So let's have a look what's happening here. Nikkei 225. This morning, we had a bit of data. Let me just jump into... Oh, no, not this one. Right, not this one. Let me just jump into the calendar, the economic calendar. So, this morning we had a bit of a few pieces of data sets from Japan. So, one of them was the industrial production month on month and year on year, the final ones. So, the numbers came out very well, so that's great. In a way, all looks quite good. Let's put it this way. Nothing to worry about, should I say. But hey, for now, I think that there are still concerns in general. Look, if we look at it from the technical perspective, I talked about this little upside support line, which provided good support in a way that it did its job. We rebounded and pushed higher and ended up testing this 36,740 zone. And by the way, I'm looking at the futures. If you're following me, you already know this, but I'm always looking at the futures here. So in a way, it's like kind of similar to the cash index. So just in a way, you can apply that to the other indices as well. In general, the point is here. The point of this webinar is not to give you, let's say, where to buy or or sell or something like that. No, we analyze the market. I analyze the market. I share you my opinion. I provide a few areas, key support and resistance areas, which, if get violated and according to all the TA rules, it couldn't kind of increase the chances of a further drift, in that direction, in the direction of the breakout. But again, different situations happen, so sometimes, that doesn't work out. So we try to analyze everything. We try to look at all scenarios possible So that's the whole point of this show. Now, just in case if you're joining in for the first time. So yeah, Nikkei 225 had a beautiful hold up near this lowest point of April of 2024. And previously it acted as a good area of support. Then we kind of violated a few times, but this time it is respecting it, and basically it is holding below it nicely. To be honest, I mean, okay, I'll continue monitoring this line, but in general, what I'm monitoring here are these two trend lines: the short-term upside support line taken from the low of the 6th of August, and the upside this downside resistance line taken from the high of the 11th of July of this year. Now, in a way, we can say that we are coiling up. And so if we are doing that, then I would say we need to wait for this one to make a move out of this little triangle formation. So if you're not comfortable right now with, let's say, trading within it, I will totally understand, because to be honest, the only thing that I would probably consider right now is the possibility maybe for an upside, for the upside here within the formation. But hey, if, like I said, this still could, let's say, if we do push above the 36,740 zone, then not I would be aiming for the downside line. But my EMAs here are the ones that could, in a way, provide a little bit of a hold up. So yeah, that's the situation right now with Nikkei. Like I said, it could present itself with some nice opportunities later on, but hey, let's not rush into things for now. Let's just keep an eye on this one, and I think that we might see some sideways action, to be honest, up until the 18th of September. And if you don't know what the 18th of September is happening, we're getting the Fed interest rate decision. Yesterday we had the ECB, which was quite extraordinary, I would say. So yes, next week we are having the Fed. But again, for now, like I said, we'll keep an eye on this. For now, if we do pop above this 36,740 zone, yes, I'll consider slightly higher levels, but only up until these EMAs or maybe this downside line. China 50. China 50, beautiful hold up near this area. Now, yesterday, if you watched my session with Christian de la Frate, we talked about this, and I've pointed out that this thick line here is quite actually an interesting level, because if you click on the monthly chart, you'll see that we are near the lowest point of 2022. So previously, back in the beginning of this year, we did violate that area. We violated it, but then the next month we traveled back above it. So now today, and again, right now this month, we are seeing a hold up here. Because if this holds, if by any chance this holds, then we rebound back up, this might be the beginning of a possible move to the upside. Because we created like it would be classed as a higher low, and potentially this could be seen as a bullish indication. Of course, don't get me wrong, we would still have to go for a higher high, but for now, I would say for now, just let's be on the cautious side. I mean, scrap this whole idea. If we do start pushing below this 11,150 zone, and we stay below it, and then if we start clearing the 10,640 area, ooh, now that's going to be a little bit more disappointing for a lot of bulls here. But again, at the moment, it's at a very interesting spot. The way you can play this game is just continue watching this one on a daily chart, and if that's gonna if we see some rebounds here and we see struggling, this index struggling to overcome this, then yes, great. Maybe a bit of an upside here move could be possible. Oh, I can see there in the chat room, GW Ruman FF, sir. Hi, sir. Hello. Good morning to you too. Thank you very much for jumping into the session. I really appreciate that. So yes, feel free if you have any questions. Honestly, I'll see if I can answer those. I mean, I don't know everything, but hey, I'll try to do my best. If I don't know the answer, I'll try to, guide you towards the answer or something, or where we can find the answer together. ASX 200. So yes, looking at the picture here, beautiful, beautiful. I mean, look at this thing. I mean, this is just amazing. I talked about this and this week, and I said to keep your eyes on this downside line, which you know, if it gets broken, yeah, but right now, this downside line got broken. I talked about this 8,070-80 zone-ish. So yes, said that if that gets cleared, the next target is the 8,121 zone, which is the current all-time high. And look at this, we created a new high on the futures here. So the only problem is that we're struggling to stay above that. And okay, these are the futures, so we could still see a push higher, but let's keep an eye on this today, what's going to happen. And yep, it's going to be quite interesting to see if we can stay above this barrier. If we can, a great further upside here could be possible. But yep, for now, I mean, if by any chance we see a strong reversal back down and we drop back below this downside line, which is taken from the high of the 1st of August, then well, then potentially there could be a bit of a retracement back down towards the downside. Towards no, not the downside, sorry, towards the 45-day EMA shown as the red line right here. GW Ruman FF back-to-back 3 loss in news trade NFP CPI PPI. But why can you please explain what do you mean? Sorry, I mean I did not get the question. I mean you experienced a loss or what's the situation or sorry, I didn't really. Roman, can you just explain the question please a little bit more? Because I didn't not really understand. You were trading the news, and that didn't really work out, or something like that, or what's the case? Sorry, can you just like a little bit elaborate on the question? Thank you. So yeah, Dow Jones Industrial Average. Let's jump into that one. Beautiful pop here above this 41,000. Look, yesterday I talked about this idea where I said that hey, maybe we could stick around in the range here, but if we start clearing the 41,000 zone and we stay above it, then yes, great. Potentially this could attract more buyers into the game. So far so good, I would say. Yes, we're pushing back up and we're pushing um, towards the current all-time high, which is roughly around the 41,681 zone. That's on the futures. In general, yesterday, Dow was not the best performer. Right now, we are seeing a bit of a tech recovery. And yep, looking good here. I mean, still looking good. I mean, still pushed nicely to the upside, but not enough. Not enough. So yes, looking at this situation here, for now, I will say it this way. As long as we stay above the 41,000 zone, I'm going to continue targeting the upside. So, yep, Roman, by the way, I'm still waiting for that, your question. Please, can you just explain a little bit more what you meant in there? So, the S&P 500, looking good as well. We pushed further north and we tested one of my key resistance areas, 5,600. Good area of resistance, looking good here. So in a way, everything's kind of working out nicely. But look at this. I mean, we're pushing higher, but I talked about this before this week, and I said to you, we could see maybe a pushback up here or something, or maybe a drift back down. In general, I mean, it's either up or down in general. But the thing is that I'm talking about what I mean is that I'm talking about the Fed, the interest rate decision, which is coming out on Wednesday next week. So I think that this index could start moving sideways all up until then. If we somehow go and break the upper side, for example, here of this downside line, this key resistance area around the 5,660 kind of 5-ish, then yeah, of course I will go further north. I will consider higher levels, but for now, I need to be. We all need to be a little bit on the careful side. Yesterday, we got the US PPIs. Let me just jump into that number very quickly, because the month-on-month was not bad, but let me just refresh our memories here. Friday, Thursday, there we go. Where's that number? Why I cannot see that? Ah, it's at okay, different time. There we go. So yes, so PPI month on month came out better. So the market is like, okay, great, wonderful. You know, there's like there is growth and everything, but the year on year it did decline. So okay, yes, on the monthly, from the very short term perspective, great, wonderful. I mean, we got the you know, a higher number. That's wonderful. We managed to beat the forecast, but on the year-on-year side, we did not. So I don't know. Like, I mean, I wouldn't really get way too comfortable with that idea that there's like a lot of positivity or something. Yes, for now we're seeing some, you know, nice moves here to the upside. We're seeing a nice recovery. Looking at the weekly chart here, if we can, if my internet is not gonna slow down. Okay, let's me just take a pause because this is, yes, my internet is crashing a little bit. So hopefully, ladies and gentlemen, this is not, you know, okay, this is annoying me a little bit, but you know, I cannot really do much. I mean, because it's there we go, there we go. We load it up again and uh check this very quickly. Okay, now we're back. Now we're back. Okay, so what I'm talking about here is that we're seeing a nice correction back up here from last week's sell-off, which we had here. We're now seeing a nice recovery. So, okay, that's great in a way. I mean, look, we have ourselves an upside line here as well. So everything's looking quite positive in a way. Now, am I getting really positive with this, with all this? I mean, I'm expecting a little bit more, maybe upside here, maybe up until here, up until this 5,665 zone or a little bit below that. But still, I don't want to say that I'm gonna get very positive here. I'm considering a bit of a sideways action here up until the Federal Reserve, which is expected to come out as I said, 18th of September. Now, this is where it's interesting. Now we're back to two cuts. Okay. We're back to two cuts, or should I say, we're back to an increase in two cuts here, or the probability of two cuts. Look, I said it before, and I'll say it again. I'm not really expecting two cuts, but if that's gonna come out, I mean, that would be. I don't know if that would be really a positive thing. However, nobody knows, but for now, look, one cut, I think that's quite logical. Two cuts, that's a little bit stretching it, in my opinion. But hey, we are. I'm not going to exclude, after yesterday, I'm not going to exclude anything, because yesterday it was from the ECB. That was a little bit of a, in my opinion, that was like, wow. I mean, I still am trying to figure out how the hell that all these numbers did not align and everything. But anyway, so yes, coming back to the index. Oh, by the way, I can see that Roman, hi, everyone's position is downside for NFP, CPI, and PPI news event, but market goes up and every trader lost. My English is not good, sorry, but I think you understand. Okay, look, Roman, this is this is the problem that you know, sometimes traders do, and this is I mean, I've done that as well myself, and look, the trend, if the trend gets established in the short run, I mean, the news sometimes doesn't matter. It does sometimes. Sometimes like bad news is good news, but good news is bad news. So unfortunately, this fluctuates. So try my strong little how to say recommendation is try not to trade based on the news, because try to trade, if you are trading, based on, let's say, market sentiment in general. And in general, I would say, me personally, I mean, try not to trade the news, or try not to jump into trades before the release of the news, because that is, I mean, okay, great if you get it right, but you know, a lot of times we don't, and that's why we try to protect ourselves. So I strongly recommend, when the news comes out, let the market settle down, because as you saw this week, I mean, for example, on Wednesday we saw initially when the CPIs came out, we saw a sell-off here, and then we found support here, and then look at this reversal, sharp reversal back up. So, and by the way, with the CPIs, where are those CPIs? Where's that number? I passed it. There we go. It came out at 2.5. So initially the market was selling off, and but then the market thought, hey, you know what? That's a good number. So maybe, like lower CPI, that's good for stocks. And this is where, like I said, initially we sold off, and then it took out a lot of traders. And this is what, the market does. And then we go, and then we rally. And this is where, like I said, this is where you need to wait. Don't try to, how to say, just purely go from the news. They did work out. So a lower interest, a lower CPI number is good, beneficial for the stock market. So in a way, kind of at the end of the day, it worked out. But when the news comes out straight away, you might see madness, you might see craziness, and this is what I keep on trying to tell people, that try not to play the game. If you are entering a trade, first of all, it has to be like the smallest trade ever, because yes, volatility is great, but only if you get it right. But unfortunately, we don't have the crystal ball, and that's why we enter like a smaller position. And then you can at least, maybe, let's say, if it went against you, maybe you can average out. But again, it's or maybe something like that. So, or maybe actually better, what would be better is to put a stop loss just in case, if it didn't work out. So, um, you have to accept the losses in general. But look, if coming back to the point of just purely following the news, if you know economics and you follow the logic, this is the thing. The markets sometimes are unlogical, and don't forget that what somebody else knows. As always, remember that this is a game where if you're winning, then somebody's losing. If you're losing, then somebody's winning. So if you know what then a lot of, for example, everybody was like going in long because they saw a lower inflation number. They thought that, hey, great, let's say, it should go to the upside, but then it started selling off. A lot of trades got triggered here. Their stop losses got triggered. Everybody then thought, okay, you know what? I think this is going to collapse because it's approaching this area. And I keep on saying, look, wait for the breakout. Don't rush into things. And everybody was like, oh, probably this is for sure gonna break this one. And this is where everybody starts entering the short because they're thinking that it's going to go for a lower low, which kind of, in a way, is logical. But this is the thing. The market then stabilizes and thinks, hey, you know what? The CPIs were lower. Let's go back up. And this is what happens. And this is it's like where people get caught out. So that's why I allow the market to settle down. I'm trying not to, how to say it, not to jump in straight away. I'm trying to just wait for it. If it ticks all my boxes, then great, but if it doesn't tick all my boxes, then if I see this chaotic movement, some people are comfortable with that, some people are not. Like, people like me are not comfortable, so I just stay away and just to wait for a better opportunity. So now then, I don't know, Roman, I don't know if this is answering your question or something, but like I said, I don't want to give out advice and everything, but try not to, like I said, not to purely base your, like I said, looking at the numbers is good, but look at what's happening in the market in general, because sometimes the market ignores what's happening in the in the numbers. And if it has already a preset like idea that, oh, let's go higher, it will go higher. And then it might react to the numbers, let's say tomorrow, the next day or something like that. So, oh, like, actually, you know what, the numbers were not that good. Right, okay, let's sell off. So this is the thing. So I have seen this happening many times, and I have been caught out on this many times. So you have to kind of understand that, yeah, this is like, you have to keep your head cool. So yes, once again, like I said, Ruman, I don't know, like I said, if it answered your question, but yeah. Look, you can always throw something else at me, so I'll try to pick up on that. Coming back to the indices, Nasdaq, beautiful breakout. So okay, this one is a little bit more positive than negative. Now, I want to quickly have a look what's happening with this fella, NVIDIA. Okay, pushing back up. Okay. Yes, after a few days ago on Friday, reaching the area around the 100, near the 100, rebounded back up. 20% gain, honestly, from the lows here, straight away. Boom, there we go. NVIDIA. You might like it, you might not like it, but you cannot deny that this is an animal, and I think that this is what a lot of market participants will kind of try to do, and they will always try to pick up on stocks like these, and whenever they decline. So yeah, Nvidia, nice move back up here. Let's see if we can go further north here, but again, I don't think that we're gonna get how to say it, we're going to be that strong. Look, we're going into the period before the Fed, so I don't think that the market wants to, go crazy or anything. But hey, for now, let's keep an eye on the price action. For now, looking, of course, on this picture on Nasdaq, everything looks a little bit more positive than negative. But hey, if by any chance we start drifting back down, back below this downside line, and we fall below my EMAs here, the 45-day and the 100-day EMA, then yes, I will consider a bit of a move back down. The German index DAX, so yes, rallied yesterday, of course. Enjoyed the fact that the interest rates got cut. I mean, look, for me, it still is weird. Where's that Thursday? There we go. So if you look at the outlets, if you look at the the numbers here, so look, the interest rate went from 4.25 to 3.65 because initially the forecast was at 4, and in the beginning of the week, and I looked at this, and I'm sure, and I will actually, it's on the videos on Monday, it was at 4, and this quickly escalated very quickly, and then suddenly everybody started accepting that now it's 3.90 was previously, and how, I mean, I don't get it. But the deposit facility rate, okay, dropped from 3.75. Okay, this one's understandable. Now the marginal lending rate as well significantly declined. So look, a lot of craziness happening. So in general, yesterday, Christine Lagarde came out saying that yes, they are. At the moment, I think that they're going to continue with examining the lowering rate situation because they're expecting inflation to pick up later on. Well, which is logical. This is what we talked about yesterday with Christian de la Frate in my session, that you need to drop it significantly, because if you're expecting higher inflation, then you will be hiking later on. So you don't want to cause too many problems, and when your rates are a little bit on, let's say, on the higher side than usual, in comparison to where they were, let's say, a year ago, 2 years ago, then yeah, I mean, I think that the market the market then can react negatively, because if you're gonna start hiking rates, because, well, you will have to start hiking rates if inflation starts picking up. So this is what I think that they're afraid of, so that inflation will start picking up. And let me just double check what is the Eurozone inflation right now. It's 2.2. Okay, it's on the lower side, quite low. It's close to the target of 2%, the ECB's target. But as I understood, they're a little bit on the careful side, and they're afraid that it could start picking up again. So maybe then these major cuts are expected, and that's why maybe we can see here a rise on the percentage here on the probability for having two cuts here, or let's say a cut by 50 basis points from the Fed, or by the Fed, on the 18th of September. Okay, let's again not over speculate on this one for now. Everything's looking quite I would say positive still here. We pushed above the 18,500 and 500 zone, but what we said yesterday, that around here it could be a nice opportunity, to maybe start getting short. But again, this is just an opinion. Would I go short right now? No, because I want to see some confirmation. For me personally, if we do start pushing back below the 18,510 zone, then this is, yes, this is where I'm going to get a little bit more excited with the downside. Am I going to get very excited? No. A little bit? Yes. So that's what I'm saying. So yes, as I said yesterday to Christian, that I'm not gonna, like I said, yes, it looks quite interesting. Yes, like a reversal from around here, but still there is still potential for this one to pop higher. So that's why don't rush into things, ladies and gentlemen. Just take everything with a pinch of salt, and yes, don't like try to overplay it. Never try to capture the, like, let's say the top, if you're selling, or the lowest point if you're buying. It's great to capture that, but sometimes it's a little bit sometimes it's unrealistic. So just wait for a better confirmation instead. And for me, for example, a drop back below the 18,500 zone would be that little confirmation. The FTSE 100, let's have a look at this one. Yes, beautiful move back down. Basically, we're kind of oscillating around the 45-day EMA. So, you know what? First of all, this level no longer needed. And for now, looking at the 45-day EMA, I mean, and looking at where we are with this index, yeah, I think will continue oscillating. That's why my downside scenario is on a drop below this 100-day EMA. If we can get that move, amazing. More sellers here could join in and aiming towards this 8,116 zone, or maybe even below that, to aiming for the 200-day EMA. For the upside, I'm just gonna observe this price action here. Look, I have this downside line, but it kind of got violated, so I think that maybe it's no longer valid that much. So I think that what we can do here is we're seeing something of a broadening triangle or something like that. But look, I think that it's better just if we do push above this upside resistance line, if I can say this way, upside resistance line. I mean, yeah, no such thing, but in my head there is. So if we do clear this, yes, I will get a little bit more excited with the upside and potentially aiming for that 8,440 zone. US dollar index very quickly drifted nicely to the downside yesterday. Look, I talked about this and I said to you that don't be surprised if we are gonna move sideways here up until the 18th of September, when the Fed will come out with their interest rate decision. So in general, I'm kind of bearish still on the US dollar in the short run, not in the long run, but in the short run. So ideally, I would love to see that move towards the 100-day, not the 100-day EMA, but the 100 level, or even a little bit below that. That would be spectacular. But probably I'm looking at this territory right here, this area between the 100.30, 40 levels, and if that gets cleared, yes, this may attract a few more sellers into the game. Jumping into the gold. Yes, sorry, I got distracted a little bit here. Gold. I mean, wow. Yesterday, US dollar weakness. Poof, boom. Like the lower interest rates environment. Amazing. Everything kind of, because the probability for a two cut here moment increased as well. Look at this. I have to admit, yesterday I was talking about this one again. About this one, I was kind of saying that I'm not going to be surprised if we're going to see some sideways action here because of again the Fed, the waiting for the Fed moment. But if we clear the upper side here, this area, then yes, of course, I'll go further north. And as I said yesterday in my video with Christian de Frate, we basically, I said if we just follow purely technical rules here, then we look at the prevailing trend. The prevailing trend before entering the range here was to the upside. So the greater chance for this one to break out is to the upside as well. Boom, tick, fantastic. What's next? Well, 2,550 got reached. Then we reached the 2,570. So my question now is, how far can this go? how far can this go? Because at the moment, of course, everybody's like, preying on that 2600 zone. And yeah, and the question is, can we reach that today? Today's Friday the 13th. So let's potentially make the life difficult for the sellers. So yes, maybe that could, be the case today. So don't rush into things, ladies and gentlemen. I'm gonna get a little bit more at this point. Let's say for me to get bearish, I would need to see a drop back below the 2,531 zone, 32 zone, somewhere around here. Silver is flirting with that psychological 30 level, and in general, what I said to you before, that if we do clear that 29.16 zone right here, then we could go higher, further north. The next target is going to be the psychological 30 zone. But look, I have this 30.19 area, which is a nice, good area of resistance. So let's aim for that one first. But in general, before going higher, it would be nice to see maybe a bit of a retracement here at some point, just maybe like a correction back down, maybe towards this little hurdle here. No, that's not what I like. I like this. So maybe towards this 29.6570 zone-ish. I think that would be a good retracement before, let's say, going for an attack higher. So this is something for today. But at the moment, we're battling that psychological $30 mark. And let's see if we can easily overcome it. Because at the moment, yes, we had a fantastic rally, I mean, yesterday. So I mean, most likely it will continue today, but again, I want to see a correction, a little bit of a correction first before, going higher again. Oil, jumping into oil. So oil climbs back above this 69.29 zone I talked about. So in a way, everything's kind of pointing a little bit more towards the upside. Okay, look, the upside in the near term, I would say, because at the moment, yes, we climbed back above this upside line as well, the flatter one taken from the low, the 12th of June. So hey, I think that there is a chance for this one to push back up a little bit, unless it starts falling back down. And look, you know what I'm gonna do here, what I'm gonna do is I'm gonna keep an eye on the inside swing high here of this, basically on the high of Wednesday, near the 68 zone. A fall back below it may attract a few more sellers into the game, ladies and gentlemen, and we could then target the 65.25 zone, somewhere around here, or the further down, we could go further down and target the lowest point of 2023. Jumping into natural gas very quickly. Yes, beautiful pop as well. So yes, commodities did enjoy the weaker dollar yesterday. And so far, so good. 2.27. Is that going to be, the good area of support for the future? Most likely. But time will tell. But again, the fact that we've climbed above all my EMAs, that's, of course, yes, opening the door towards that 2.45, 2.5 zone, something like that. And then, yeah, we'll go from there. Soybeans, very quickly. So I kept on talking about soybeans from the beginning of this week. We have this downside line here, which is a good area of resistance. So if that gets cleared, yes, great. We could go higher. But I said to you before, I'll stick to my game plan and I will wait for a push above the 1030 zone, somewhere around here, because at the same time, we could be pushed above the, well, we will be placed above the 45-day EMA as well. And then the next target is going to be the area near the 100-day EMA. Wheat is trying to climb higher. And yes, for now, everything's looking a little bit more on the positive side. However, we need to overcome the 200-day EMA first, because again, at the moment, it's we're struggling with this. It seems like we want to go higher, but let's clear the 200-day EMA first. Let's jump into the crypto world. Bitcoin is, as I said yesterday, it's, I'm not excluding the downside scenario yet, because we're still below the EMAs and we're still below some of this trend line. We're not far from the lower side of the falling channel. In general, okay, don't get me wrong, in the long run or medium term, maybe even, we could see a push higher because if we just go purely from the technical analysis perspective, then we have ourselves a falling channel. We look at the prevailing trend. The prevailing trend is to the upside, so the greater chance for this one to break out higher, to break out is to the upside. But things happen. Things happen, and not always according to, or should I say, how we would like them to happen. And that's why I'm not excluding the downside scenario yet, but I will start looking at some lower levels if we do fall below the 53,000 territory, and then yes, we'll go from there. Bitcoin Cash. Bitcoin Cash is looking quite interesting here as well, and yes, for now, I would say it is drifting back down, and it's approaching this key area of support again, or could be approaching the key area of support of 300. That's what I'm looking at. For me, the downside scenario is going to be from this 300 zone. If we clear it, great, I'll go lower. But for the upside, I need to see a clearance of this downside line taken from the high of the 8th of April. Ethereum very quickly. So still struggling with that 2,389 or 90 zone. This is a new line that I've drawn because I think that this kind of carries a little bit more significance. So, and indeed it does. Nevertheless, my preferred upside scenario is from this 2,555 zone. If that gets cleared, great, more buyers could join in. Litecoin. Litecoin is rebounding still. I mean, it still remains above this kind of psychological 60 territory, which is great. So let's see if we can stay below above it. But the problem that I have is the 45-day EMA, which so far has been doing a good, fantastic job for the sellers, because whenever we approach that, we struggle to overcome it, and then we drift back down. So of course, at one point, this will have to surrender, but is this going to be the next time? Well, we don't know, so that's why we need to be a little bit on the careful side. Dogecoin pushing back up again. So Dogecoin looks quite good because we have approached this downside line, which is taken from the let me just adjust it a little bit better. So this one right here. So we approached this downside line taken from the high of the 28th of March, or should I say the highest point of March of this year. And now the question is, can we clear this? If we can clear this downside line and we can clear the 45-day EMA, then yes, more buyers here could join in. So this level here, I'm no longer going to have it there. I think I'm going to mark this barrier instead. And I think that, yeah, that could be a little bit better here. So if we clear this area, wonderful, I will go to the upside. Ripple. Ripple is ripping to the upside. And that's what you always want to say, basically, ripping to the upside. But I think that's incorrect. Yes. Look, for now, I mean, I said to you before that if we do push back above all my EMAs, right, I will consider a move higher. And that's what I'm going to stick to. Let's jump into the forex world very quickly. Just have a quick glance. So yes, AUD USD currently flirting with this downside line, and in a way, everything's looking a little bit more positive on this one. AUD JPY stuck yesterday, not yesterday, on Wednesday. It did drift lower, but found good support near the 93.42. And then rebounded and pushed back up. But look, we talked about this yesterday, and basically we agreed on the fact that the market should look something like AUD JPY, but actually the stock market I'm talking about. So, but the thing is that we're seeing something else here, and this is a good risk on, risk off monitor, the AUD JPY, but it seems like it wants to go lower, and that would in a way indicate that the market is not feeling very well. And that would indicate that, you know, we need to be cautious of further advances in the stock market, because if AUD JPY is going to start drifting further south, I mean, this is a clear indication that we are kind of getting into that risk off environment. So yes, so for now, it's a tricky moment. It's a tricky moment. That's why my downside scenario is from around here, from around this 93.42 zone. If that gets cleared, amazing. More sellers here could join in. NZDJPY, similar story as with AUDJPY. We are drifting lower, so we remain below that 80 87.70 territory, somewhere in this highlighted zone, the bottom lowest highlighted zone here. So in a way, that's kind of still pointing towards the downside. For the upside, I need to see this one pushing back above this 87.7 zone. If we can get that move, great. I will go to the upside. CHF JPY, yes, beautiful move here, amazing, and we remain below the 166.70 zone. So yes, great. I think that yes, I will continue further moves to the downside. USDJPY continues to slide, so we're picking up some action in the Japanese yen, and I think that this action in Japanese yen, first of all, the fact that we are seeing some weak, well, actually, in USDJPY is moving to downside because US dollar is on the weaker side, and also Japanese yen this week. We got the BOJ comments, or from comments from one of the officials, that they're still continuing to consider possible rate cuts. So yes, this is what I think that the market needs to understand, that sorry, rate cuts, rate hikes. What am I talking about? Rate hikes, and this is what, yeah, the market needs to understand, that this could apply some buying interest on the Japanese yen. So if you compare it to where we were like in around the beginning of July, I mean, and then comparing it to where we are right now, this is just, yeah, amazing. USDcad very quickly. So this one, in a way, mission accomplished, because I was talking about these EMAs, we reached those, and now I think that what I would like to see here is, first of all, get rid of the Fibonacci, no longer needed, and I'm gonna, if I want to go higher, I will keep an eye on the EMAs. If that gets cleared, yes, I will go to the upside. So in order for me to go higher right now, I need to see a clearance of all my EMAs, and then I'll go higher. At the moment, I'm leaning a little bit more towards the downside, to be honest. And yes, we're seeing some strength in oil. We're seeing some weakness in USD. We're seeing some weakness in the USD, in the US dollar. So it's a great cocktail for for US dollar, USD CAD to go lower. Let's see if that's gonna be true. gbpusd, beautiful rebound. I mean, look at this. I mean, I warned you about this. I said to you, keep your eyes on this. Keep your eyes on this area. I mean, look at this. The 45-day EMA, fantastic support. Beautiful. We did drop below this hurdle, this 1.3045. Amazing. That's great. But then with this 45-day EMA provided good support, rebounded, pushed back up. Look at this. Boom. Fantastic. And move back to the 1.3141 zone. And just to let you know, that level is this one right here. That's the highest point of July of 2023. So yes, good potential area here of resistance. Let's see if we can climb above that. So jumping into the euro pairs, I mean, after yesterday's roller coaster ride, I mean, after yesterday's announcement, look, in general, I would say the euro should feel the heat, but as we can see here, euro is feeling okay, I would say, and especially against Euro CHF, we pushed that back up, but this area here is providing good resistance. This 0.9442 ish. If we get nice clearance of that one, amazing. I will consider a move to the upside, a further move upside here, or should I say a larger correction to the upside. EurnzD, a bit of a, like I said, a roller coaster ride, but this seems to be like a flag right now, like a bullish flag. We remain above the 200-day EMA, so that's great. And let's see if we can do that. But still, I will stick to my same game plan. And I said to you that for the downside, not only that I need to see a drop below this 1.7918, but also a drop below the 200-day EMA. And this is exactly what's happening here. We are not getting that drop, so we're keeping a close eye on this. Okay. I will keep, yes, if we do drop and fall below this 200-day EMA, I'm going to go lower. For the upside, I'm taking a very neutral and conservative approach. 1.80, 32, 35, 33, something like that. A break of that is needed in order to go to the upside. EuroJPY continues to slide, yes, like USDJPY as well. So yes, we're seeing a bit of strength in the yen right now. So that's all fine. But I'm targeting the 154.40 zone-ish here, and then we'll just take it from there if we do reach that. And finally, EURUSD. So beautiful, beautiful. I said to you that, look, we're in the falling channel. pattern. And if we do rebound from this lower side of it and the 45-day EMA, then yeah, great. A few more upside moves here could be possible, especially if we also climb back above the 1.1040, 47, 50 zone here. Tick. And said to then my next target is going to be the upper side of the falling channel. Let's see if that's going to happen or not, because for now, it is looking quite interesting and looking a little bit more bullish, but I'm not excluding a bit of a retracement opportunity here. And in general, I'm not excluding the idea maybe of forming something of a, of a bullish flag here all the way up until the, the interest rate decision. So, yeah, do not exclude that idea. Could be quite interesting, could be nice. So, but as long as we stay above the 1.1050, I'm leaning still towards the upside. So, ladies and gentlemen, that's it. That's it for this session. I hope you found it useful, and thank you very much. GW Ruman FF, thank you very much for your comments. I really appreciate that. So, hopefully, like I said, hopefully that helped what I said. But hey, I hope in general everything what I said this week did help you out. In general, I hope these sessions are helping you out. So feel free to let me know what you think. But what I would like to say is that look, have a beautiful weekend. Try to stay safe, and well, especially today, if you are trading, then try to stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. So yes, but most importantly, go into your weekend and try to relax as much as possible, and then come back fresh on Monday, because we will get another exciting week. So, ladies and gentlemen, thank you very much, and I'll see you next week. Bye bye.